Hi, welcome back. In this video, I'm going to talk about one of the best trading strategy in the world. In this trading strategy, we are not going to use any indicators. 90% of traders use trading indicators. But you may already know that 90% of day traders lose money. Basically, this strategy is depend on smart money concept. If you don't know, smart money concept is a concept which help us to identify market structure. You know, a lot of traders try to use indicators to trade crypto. But the thing is, almost all the indicators are lagging indicators. That means you can't predict the future market by using those indicators. But successful traders are not going to use trading indicators. At least they are not dependent on trading indicators. They try to understand the market. They try to understand the support and resistance levels, and they try to understand the behavior of the market. Then they place the order at the best entry point. So a lot of successful traders are using smart money concept. When we consider about smart money concept, there are basically two parts for that smart money concept. The number one is fair value gaps or market imbalance. Here you can see clearly there is a gap, fair value gap, or it is called market imbalance. This is the first one. Second one is order blocks. You can see here there is a order block. Order blocks mean when there is an impulsive move like this, we can find the order block just before this impulsive candle, just before this engulfing bullish candle. So in this case, this is the order block candle. So if we take the length of this candle and draw it all the way here, you can find the order block. So this is a liquidity gap or market imbalance or fair value gap, and this is order block. This is the most important part of this concept, and you should understand this order block is performed, or the order block is made due to orders in the market. Those orders are placed by billionaires or hedge funds. Those are massive orders, not the orders from retail traders. So when there are large orders like this, markets tend to have impulsive moves, and if this market come all the way down to this order block, these billionaires or these hedge funds try to buy again, and there can be another impulsive wave. This is basically what we understand from order block. But the fair value gaps or this imbalance of the market is made by the algorithm. That means it is affected by the algorithm. So when there is a fair value gap or market imbalance, the market always try to fill this gap. Here there is a fair value gap, so market try to fill this gap. Okay. So when we see this kind of a gap or the market imbalance, we know that there is a high possibility that market would come to fill this gap. You can see another fair value gap here in this area. You can see another gap, fair value gap. I will change the color of this to green color. Okay, and there is another gap here also, and of course there is a order block here also. You can see there is a order block before this impulsive move. There is a order block. So this order block and this fair value gap is on the same level. So there is a high probability that market would come all the way down to here. And if we zoom in, you can find market has filled all these fair value gap. Market filled this fair value gap here and this fair value gap. And since there is order block also here, market try to bounce from this area. Here also you can see at this current market, there are few fair value gap. Here there is a gap, and here also there is a gap. The first fair value gap is now filled with this market movement, but there are few other gaps to be filled in the future. For example, here you can see the fair value gap, and you can see another one here, and you can see here there is a bearish order block. Here you can see there is a bearish order block. I will change the color of that to this one. Right, okay. Now we should wait until these gaps are filled. There's a high probability this market will go all the way here to fill these gaps. But don't forget, there is a order block here. If market went all the way up to here, there's a high probability that market would reverse and bounce from here. So take home message is, when there is a fair value gap or the market imbalance on a chart, market always try to fill those gaps. And if there's an order block, there's a high probability that there would be a resistance or there could be a support from that order block area. And if you have order block and fair value gaps at the same level, there is a high probability that market price would react to that area. So if this video was helpful, please subscribe to my channel and hit the bell icon. And in future videos, I will talk about this smart money concept. So until next time, bye bye.